Welcome to the second Confidentially Speaking webinar. I'm thrilled to have with me today Kellie Badge, who will be talking to us about all the wonders of forensic accounting. And a brief introduction. I know Kellie personally, that's me being honest with you, so I'm giving her a plug because Kellie has helped me along the way in giving advice about forensic accounting and where it is appropriate to use forensic accountants in business transactions and disputes. Kellie is an experienced forensic accountant and a director of Forensic Solutions Litigation Support. Kellie has prepared business valuations for a multitude of purposes, including shareholder and family law disputes. And these have been used in the federal court, the federal family court, the Supreme Court, VCAT, and, well, any court that you might need some help. Kellie is an expert in assisting in litigation matters. In addition to business valuations, she also helps in all aspects of litigation support, including economic loss claims, independent determinations, review of other expert reports, preliminary assessments, and consulting expert work. Kellie is a regular guest speaker for a number of legal professional development training organizations such as LegalWise, and she has also been a guest speaker at the Family Law Section Biannual Conference Junior Lawyers Program in 2016 and 2018. Before I formally welcome Kellie to our webinar and start grilling her about all things forensic accountants, I have a little bit of housekeeping to talk about, and that's it. This is a learning experience and webinar, and we welcome questions. So if you have any questions, please put that in the chat and we will try and answer them, or I should say Kellie will try and answer them as best we can. So Kellie, firstly, with forensic accountants, tell me a little bit about how they differ from CSI Miami and forensic accountants generally.
Absolutely. And that's quite often a lead that I'll use when people say, oh, forensic accounting, what's that? And it's kind of like CSI, but without the body and bloods. It's really numbers based. So a forensic accountant really is an accountant that analyzes and investigates financial documents and data. And they differ, there's so many different sorts of accountants, and we all sort of get bundled into the one package, right? Of, you've got your tax accountants and you've got your accountants that prepare financial statements. Forensic accounting is one of those little areas of accounting. So, and within forensic accounting, you also have little niches also. So you'll find some forensic accountants will have a specialty of looking at fraud type matters, and that's a different type of discipline to apply to those particular matters. You'll have those that will look at dispute resolution and the whole gamut of what's involved in there. So fraud is something that I don't delve in. As I said, there's a different sort of skill base and some training that goes with that. I look at dispute base and pre-dispute type matters.
Fantastic. And I guess that brings us into my interest and that of confidentially speaking, and that is dispute resolution.
Yes.
But not through the courts, as you seem to spend a lot of time doing, but trying to avoid the courts.
Absolutely. Right. And I think that's probably, I spend a lot of the time in the court system because we're not brought in earlier in the piece. So let's talk about that pre-dispute situation.
Perfect. And boy, do we have a scenario for you. So starting at the beginning, let's go into an actual commercial transaction. And this is an example I'm going to give that I actually sought a little bit of your advice on earlier this year. But we're in a commercial transaction. There isn't a dispute. We want to get ahead. We want to deal with a new business venture or some opportunity. And the question really is, then the scenario I'm going to talk about is, when is it appropriate to use a financial advisor, what we call a normal accountant, in doing due diligence, and when do we bring the forensic accountant in? So in this scenario, we had two parties. One was needing finance, and another company was prepared to provide the finance as long as there was what we call a purchase of the company requiring the finance, that company A, and what was happening there was they didn't want to give money. They wanted a share swap. So they
Right.
said, we'll put money into the business, but only if we own the business having the shares.
Yes.
But we will give you, the seller of your shares in our business.
Right.
So no money is changing hands really between the share.
Yes, but an ownership interest is changing hands effectively, so that they've still got an interest through the ownership portion and the future profits and dividends coming out of that business.
Exactly. So there's where we come to a problem. How do we know, in this case, that if I am swapping shares, that my valuation of the shares are correct, both for the company that's putting funds into the business for which it's receiving shares,
yes,
and the person who's receiving shares from that company as a swap?
Yes.
So is it that time when we say, oh, there's a share swap happening, bring in the forensic accountant?
Look, I would say that initially, let the parties come to the point of going through the initial stages of their negotiation. They might have, and generally a business owner will have quite a good understanding of the value of their business, but it comes down to then, well, do both parties agree with the position that either party have around the value of their shares?
Yeah.
And where they're starting to feel that they need to get some security around the information that's being put to them and the value. If there's doubt around that, then yes, bring the forensic accountant in or the business valuer to have an independent look at both of the companies and to go through a valuation process. Now, that will give them hopefully both comfort that you've got somebody independent of the two parties that are heavily invested in this transaction. Yeah. So it's giving you an outside look, an independent view around both of those businesses.
So really, there's that the independence. As far as I'm concerned, when working out my valuation, I should have, we'll call it the ordinary accountant or business valuer, working out the value of the shares. And then really only if there is an issue around whether we agree with each other on value of shares, or if a problem seems to be arising around the valuation, do we look for the independent forensic accountant? It's almost like a mediator for.
It kind of is actually. It's that position of sort of being involved in the situation, but from an external point of view and having that overarching look. The other thing to think about as well is, and quite often we find this when we get into a dispute stage, which we're not talking about at the moment, but a view formed by a person's accountant can sometimes be seen as advocating for one party.
Yeah.
So by bringing in that forensic accountant as the independent expert overlooking it, it removes that biased view or the advocacy sometimes that sort of sits in around some of those opinions that have been put forward.
Perfect. And really that then hopefully avoids a dispute after settlement.
Yes.
In the sense that we've already come to terms of what is a reasonable value for these shares.
Yes. And hopefully through that process, both parties have comfort around the fact that those valuations have been done of both of their share bases. And that they can both move forward, and they've both negotiated their transaction based on that opinion, that expert advice. So it does bring more comfort to the transaction and to both parties involved in the transaction.
Perfect. So that's when we bring you in, and to make sure that we get the right purchase price, the right share price when we involved in business transactions. So I'm going to put business transactions aside and take our little scenario and move into a dispute. Okay. So we now have agreed in principle about the valuation of the shares. Everything's going well. And suddenly the settlement has happened. And suddenly once the company that's put funds into the business looks around and says, they didn't give us all the documents. We seeing how the business runs. We have put it far too much, the share swap's been wrong. This business is about to collapse. What on earth do I do now? Is this when they call in their own forensic accountant, or are they still dealing with an ordinary accountant?
No, you certainly can pull in a forensic accountant at this point, and I would say that that's probably the best scenario to go through, because it's now in a dispute situation. So you're really looking for that independent person to come in at that point, with a mindset that if this goes all the way through to trial, can we rely on that expert throughout the matter? Now, it then comes down to, well, do I as company B appoint the expert as my consulting expert, or do we bring in an expert as the joint expert for both parties to provide an independent view that we both need to rely upon? Now, there's a couple of situations around this, and sometimes it will depend on the agreements that were formed at the time of that transaction. So if there's agreements in place, and some of the dispute clauses hold that an independent expert accountant is appointed to oversee the matter on behalf of both parties, and if they can't agree on the expert, who then appoints, or which expert's appointed? And sometimes we're finding with really old shareholder agreements or partnership agreements that they're referring to the president of the Chartered Accountants of Australia and New Zealand to nominate the expert for them. Those president-elects have not been taking place since 2015. So these really old agreements are causing quite a bit of a stir, because those clauses can no longer not be relied upon. So definitely something to think about.
So a legal alert to all those legal people out there and corporate advisors: have a look at your current shareholder and partnership agreements and make sure the dispute resolution and expert determination clauses are up to date. With who would we put in if it's not the president?
Yeah, so if it's not the president of CANS or Chartered Accountants Australia and New Zealand, then quite often they'll go, you can either put that each party puts forward the name of 3 experts, and it might be that they can refer to the state legal group, so the Law Institute of each state, and they might have a list. Another point of reference as well is the CANS, so the Chartered Accountants of New Zealand and Australia. Their website has a list of accountants that are registered with them, and those that have the business valuation or forensic accounting specialisation. So that's another sort of starting point as well.
Great, that's fantastic advice, right? So that gives the lawyers in the room something to work on and work towards. Getting back to it, let's talk about the dispute and bringing you in, because,
yes,
okay, we've got to do business valuations. How do I know what documents to give to you in order for you to provide all the information?
Yeah, of course. So initially, to start off that process, financial documents for at least the past sort of 4 to 5 years we look at, probably 5 years at the moment because of the COVID period, depending on the industry in which a business is operated in, the financial performance may be quite affected by that. So that's something that we need to take into account. So yeah, historical financial statements, but also forecasts into the future as well. In this particular case, though, we've had the transaction go through, and then we've got it to the point of a dispute. So definitely all of the documents that were provided between the parties at the time of the transaction will be very important to the forensic accountant, because ultimately their role would be, what was the value of the businesses at the time of the transaction if all of that information had have been available to both parties at that time, or the correct information. So, I'm running a matter at the moment I'm involved in a matter at the moment where not all the information had been provided up to the date of settlement of that transaction. In hindsight, with that information and looking at the points in time that information was available, what impact did that have on the valuation of the business? So in effect, I've been instructed to value the business at the time that the information memorandum was provided, the time that settlement had taken place. So it's sort of information in that time frame, but also information going into the future, or sort of between the time of the transaction and the date that the experts appointed, to see, well, how does that impact on the value of the business?
So basically, based on your current experience, and
Yes.
I'm sure many experiences,
Yeah.
don't hold back financial information when dealing with your transactions, because it's going to come back to bite you at a later stage anyway, even though you want to put your best foot forward. Put your best foot forward, put that financial information, then explain it away. Is that what you would say?
Basically, I think, something to keep in mind is not all information is going to have a positive impact on the value of a business, but certainly bringing forward the positive and the information that may be seen to reduce value or detrimental, at least provide that so that the parties know what is going on with the business at that point in time, so that the negotiation can take that into account at the time of that settlement. Another point to make as well, with information being provided, if it's unusual for the business operations at that time of the transaction, then disclose that as well. So I've had a past matter where the financials leading up to the transaction showed a really good financial position of the business. And it was an accommodation business in a particular location. Now, there were capital works going on in that location, and the accommodation was being used for the workmen at the capital works. So the occupancy rates had increased significantly, but were not reflective of the occupancy rates that were quite normal for the business. So they've transacted on the business with financials that painted a very rosy picture. But once that capital works had been finished, of course, the performance of the business plateaued at the normal rate, and of course was not performing at the rate that that transaction had been finalised on.
And potentially that might be a cause for repudiating the agreement, or
Or seeking losses.
damages.
Yeah,
so
absolutely.
Not a great idea, although it might seem a good idea at the time to get the best price for
Absolutely.
it.
Yes. So just things to keep in mind, I guess, as parties are transacting.
Okay, so I've given you all my information.
Yes.
How do you know that there's some, with the word forensic, and we're talking about CSI, we're looking for the dots. How do you know that there's something fishy in it?
Initially a gut feel, but it's more than that. We'll go through all of the financial data that's been provided to us. We'll go through all the information that we know about the particular businesses. And then we'll sense check a lot of that to industry data that we've got access to, and also any data that's publicly available also. So there'll be investigation around historically whether there's been any information within the media or widespread for both of the businesses. And it might be that they've had a particular customer contract that's gone through a couple of years ago, but we now no longer see that flowing through the financial statements. That might be a question as to, well, why is it the case that we're no longer servicing that client? So there's a lot of analysing, and when we look at the financial statements, we're literally analysing line by line. So every income item, every expense item, we're looking at fluctuations between years. We're looking at whether that sits with what we've been told about the business, but we're also checking it to the industry data that we have both historically and into the future as well, to see how the business is placed within the industry. We'll look at competitors. We'll have a look to see sort of where they're placed within the marketplace. So a whole lot of information is taken into consideration in having a look to see whether what we've been provided seems reasonable or is sitting well with what we've been told about the business as well. And I mean, quite often when we're looking at financial statements and particular line items, there may be just descriptions of income or expenses that just don't seem right. For one particular business and evaluation, there was shooting costs. Well, who's shooting who here? But the way that their internal bookkeeper had put photography expenses through the financials raised, a red flag for us. So, You just have to, we have to ask the questions. So if there's something that seems unusual, we'll just ask.
So you were thinking maybe we have to get the police involved in this one?
Yeah.
It's not fraud.
A few questions on the side going, is everything okay here? But yeah, so absolutely, the whole idea around that forensic person is that they're digging in behind the numbers and asking questions to uncover information to help them form an opinion on what the value is, or if it's it might be a series of questions that you're asking an independent expert, getting that information so that we've got the whole picture before we provide a response to that question.
So taking it, if you weren't an independent expert, but I say to you, look, there's a dispute, I want to make sure that, you look at what the other side's provided me, or even look at my own books to make sure that everything's okay. Is there a confidentiality in that? So if you kind of look through my books, you wouldn't find this, I'm just giving an example. If you went through my books and you said, well, there's something really fishy, and you find that maybe I haven't put in some tax information, or I've been withholding certain payments, would you be obliged to tell, for example, the tax office? Would there be any obligation to disclose this information to someone?
As a forensic accountant, probably not the tax element. Ultimately, it's a user's system, so you need to, as the business, be upfront in letting the tax office know. That said, though, if a matter goes to trial and is heard by a judge, the judge has an obligation. So quite often, if we take a little sidestep here into the family law realm of things, if there's, I've certainly been involved in matters where there's been tax office operation groups that have been brought in to have a look at some of the transactions that have come out of the woodwork. So you'll generally find that if that's the case, matters tend to like to settle rather than going before a judge. But look, what the situation we're talking about there is a consulting expert. So one party having the expert for themselves. And in that situation, you'll generally find that the expert's being used to help with the strategy of the case. They will help in looking at the information that is available, maybe suggesting the information that needs to be provided to the other side to provide the response that they need to a question that they've put forward. The interaction between the forensic accountant at that point, if there's a lawyer involved, will come in still under that umbrella of confidentiality. It's really then a matter of, well, what gets disclosed to the other side, and the decision process that gets made at that point.
And that's really on the legal advisor at that stage.
It is. It's not at my discretion. It's really the legal advisor, and that's where the strategic part of it comes in as to what information that they need to provide. As a forensic accountant, though, if you're for one particular party, it might be that they're operating a business. The dispute is with maybe an ex-director who's moved off and has commenced their own business in competition with you. So it might be through that dispute process, you don't want to disclose your full customer list. So there's a whole lot of risks around that, I guess. And so we've got the ability to use, say, redacted information. But having the forensic accountant there to say, okay, I at least need to show this amount of information as a minimum to be able to support the view that I'm putting forward. You're able to work with the forensic accountant around, well, to what level do we need to disclose? Because we're not wanting to disclose too much in that report, which gets given to the other side, which then discloses our whole customer client base or the revenue that we're generating from a particular client.
And that's something that comes up a lot in litigation and disputes, as to protecting business confidentiality, which is not necessarily legal confidentiality.
Yes.
And remember the redaction and remember
Yes.
that judges can give orders to keep information private, but this is not a legal webinar, so we'll
No,
move
but I
on to
mean,
that.
that's the
Yeah.
case for even the negotiation situation that we had. I'm quite sure that, you know, to a point, the businesses don't want to give them absolutely everything right at the start of a negotiation. It's going to take time to work with the parties to the point that they're comfortable and saying, okay, we've got, you know, quite a high certainty that this transaction is going to go through. We feel a little bit more comfortable in releasing some more further detail at that point.
Yeah, and I mean, I know I've been on, you know, in acquisition matters where we've actually not known the customer base until almost the day when you sell it. You get the figures and you know that there's an independent person who's gone through that and they can say these people actually exist, but you don't know who they are, or some of their intellectual property or whatever, that's held back to the last minute, and understandably so. Right, that's excellent. So I'm just going to check whether there have been any questions. Sorry if I looked down. Has anyone gone into that? No. So I just want to make sure if you've got any questions, remember to ask us. So getting back to a little bit more of experience, are there any amusing anecdotes you might have or stories you have about doing some work for, you know, around the court system where something a bit weird has happened in what you've discovered? Putting you on the spot here.
You are putting me on the spot. Generally, you find that, I guess one point to raise, it's not necessarily something that's weird, but when you do engage a forensic expert and you engage them to prepare a document, and it might be a report, it might be a letter of findings, quite often you'll find, or not quite often, but sometimes you'll find that that report, once produced by the forensic expert, is not actually suiting the purposes of your negotiation or your dispute. So it might be that that process still needs to be run through and the report's not actually submitted through to the court, or it's not relied upon. So that's something also to keep in mind. That said, it still helps the parties strategically work how they're going to move through their litigation matter and their dispute. So it might be that it gives them more focus on trying to settle and negotiate a settlement rather than pushing it through the court system.
And so that really comes to our preparation. Confidentially speaking, really is very hot on preparation. So we're going to get into that. The importance of preparation in your negotiation, doing this work well before you sit in the negotiation room, right? And so if I was to engage you, let's take that was come back to my transactional area where we had a share swap happening. And I was to engage you to say there's issues even with the valuation of our shares, maybe looking at that. How would you help us if you were sitting in the room with me and we're talking about strategy? How would you help us with our strategy?
Well, certainly we'd have a look at that valuation. So the valuation that the parties have come to a position on, we'll critique that valuation to see if there's anything that's been missed or could be, or any further information that we could bring in that might change the opinion on that value. What's really quite useful though, when you've got that consulting expert, is to use them to have a look at the valuation that's being provided by the other party. And it might be that they've got an independent person to value that, but having your expert critique the valuation of the other party is really quite powerful and useful, and certainly assists in that negotiating an agreed position on value of shares. And quite often we'll find that if each party has an expert, it might be that it almost becomes a battle of the experts. And so you can put the experts into like a joint conference type arrangement so that you can see where the points of difference are and where the points of agreement are. So it narrows down your scope of that negotiation then.
It's complex for people who really don't understand figures, and that is like how I always think, well, figures speak for themselves, right? Like the law might be great, but if, you know, isn't 1 and 1 2 and 1 + 1 = 2, how is it that forensic accountants can look at the same data and argue about how to evaluate it?
Because there's elements of it that are very subjective. Okay, so when you have a look at evaluation, I'm not going to do too deep into this today, but there's elements of evaluation that will become subjective. Key areas of that are adjustments to the earnings to get to a normalised earning, so what the business looks to achieve going forward into the future. Sometimes there's differences sitting in around opinions that experts will have there. The multiple that gets applied to those future earnings, that can also be an area of subjectivity where there's differences of opinion. Sometimes it might come down to the information that both of those experts have been provided if they're given a different set of data as well. So bringing two experts together to talk around their opinion will really highlight where that data gap is, or where one expert has interpreted data one way and the other expert may have been told the story or the data in a different way and they've had a different interpretation. So it's bringing the two minds together to talk around that situation.
And do you find generally that when that happens, the experts come to a reasonable agreement as to what the position is, or
it really depends on the situation, the businesses. It might be that there's a few valuation opinion. There's a few different types of valuation methodologies. If the experts are agreeing on that valuation, that the methodology that they're applying to the valuation, that's a good step to start. Not always the case.
Yeah.
And you'll find that they will generally come to an opinion that is reasonable in areas and agreeing, and then in some areas they just may not. And so if we're in a dispute scenario, the experts have the duty to the court and to do the best thing for the court, not for the clients that they've been instructed. So they've got in the back of their mind, or should have in the back of their mind, that they need to try and work out, if they can, resolution around areas that there's disagreement on. And it might be that they just both ask for more information to be able to finalise their opinion on that.
And where they can't agree, then the judge, I like judges, but as far as they're concerned, they can often get into strife in trying to determine expert opinions, and they've got two experts in front of them, two forensic accountants. And if I know most judges, their ability to look through accounts and that is not that great. So how do they make a determination? You're saying what's best for you. You say what you think. There's another expert who says the same.
Well, quite often, if we've got two experts in a matter and the matter's proceeding through to trial, the experts will be put into a joint conference of experts.
Yeah.
A result of the joint conference of experts is a joint expert report, and that provides the judge and the court a concise position on where the experts agree and where they don't agree. So you've got both experts either report or reports. There could be multiple, and we could be talking about multiple experts here as well. There might be more than two, there might be 3, 4, depends. And so you can get all of those experts together preparing that joint expert report. From there, it's then a matter of, if the matter proceeds to trial, examining the expert and cross-examining the expert to try and bring through information. And the judge at that point does have the ability to ask the expert questions.
Yeah. And hopefully has spent a bit of time to know, to work out who seems to be the more, I don't know, I wouldn't know what to say in the expert, who seems to have the more logical explanation of events. Really, would it boil down to that?
Sometimes it might be just the way that the expert answers the questions and whether they're quite sure in their opinion and the evidence that they're using to support their opinion as well.
Excellent. Well, I'm so excited. We've got a lot of questions now.
Okay.
Wow. Now you're really off notice. So we've got a question from Christian. Does the ATO use similar methods to what Kellie does in her work? So if they're busy auditing you as part of the ATO, do they bring in forensic accountants as part of their audit?
They have their own forensic accounting team at the ATO, so they'll have their own investigation unit within the ATO that will conduct investigations if they decide to look further into information. So generally an external forensic accountant won't be brought in for that purpose.
So if we had a dispute with the ATO, we might get our own forensic accountants to check what the ATO's forensic
Generally,
accountants.
you find that because we're talking ATO, you're really looking at tax law.
Yeah.
And so forensic accountants, while we need to know a lot about many areas of accounting, we generally don't focus too heavily and get really deep into particular areas of accounting. And one of those is tax. So for us, sometimes there'll be some quite specific tax related questions. We won't actually provide an opinion on those. We'll seek a tax accountant who is in tax law day in, day out, and the legislation sitting around that to get an opinion from their point of view.
Sounds much like the law. Everybody that's tax.
Once you get into tax, it is very, very law and legislation driven. All of the taxes, so income tax, your employment taxes, your GST, the whole lot. So while we have an understanding of it all, when you get into that sort of element of tax, we generally find the tax accountants get involved to interpret the legislation that sits around the dispute that the ATO has with that business.
Excellent. I've got two further questions, both from Ben. Does it make sense to bring in a forensic expert early, even if there's no dispute, to identify problems in the initial due diligence material? So, when we were talking about the share swap, there was a feeling that the valuations might not be quite right. But I think what Ben's saying is even if it's just right at the beginning, is it worth bringing someone in?
There's no harm, particularly from a business owner's point of view. If you're trying, you'll have a gut feel around what your business may be worth, what the market may see as that value at that time. But to have an external person come in, even do a high level valuation or an indicative valuation, just to give you comfort that you're sort of where you felt your value is sitting at is where a sort of a fair market value might be, then there's certainly benefits to doing that. It's almost like a sense of comfort, I guess, certainly in then talking with the other business around, well, what you perceive that value to be of your shares before going through that share swap.
Excellent. Right. Then the next question, often parties are in dispute for months before a dispute resolution process commences. Yes, and we say it should happen much earlier at Confidentially Speaking. Sorry for doing the plug. But how soon should a party think of, how soon should we bring in the experts? So the dispute has now started. Like we've realized there's a dispute. How early should we bring you in?
I'm going to say it depends. And the reason why I say that is we tend to find that if a party is looking at bringing on a consulting expert, so an expert for their use rather than a joint expert, the consulting expert's generally brought in a lot sooner. And then they'll assist you as you're going through that dispute in everything from looking at the documentation that the other side might disclose, having a look at, you can get your expert to look through those documents to see if anything's missing or if there's any elements that there's further questions around. And that expert then can assist in framing that question in the correct way that the other business's finance team or accounting team knows exactly what you're asking for. So rather than just putting a broad question out there, being quite specific around the questions. Then once that information comes in, once again, having a look at it, analysing it to see if there's anything further that needs to be asked or requested. Generally, we find that if the parties are moving through that dispute process, it will take some time for them to get to the point of engaging a joint expert if they decide to go down that path. And quite often that's just an element of the way that a dispute will unravel. It'll take a little while for the parties to get that information together.
Yes, we know.
And so they'll generally wait until they've got a good body of that information together before they then go to look at engaging an independent expert.
And I think that's such a good point. The importance is when the dispute starts is to work out the basis of the dispute and whether you might need expert opinion, and potentially to phone your consulting expert, like I've been known to do with you, Kelly, and say, there's a dispute, I'm not sure, maybe we might need you. If we need you, what is the kind of information you will need? So that then I can go and start getting everything together and not waste your time in the collection of information. That's all the preparation side. And then also knowing the right questions to ask.
Absolutely.
And the right expert to ask, right?
Yeah, and look, sometimes it might be that the particular dispute is involving parties that are either operating in quite a niche industry, or it might be that the business is quite unique in the services that it offers. So a bit like a GP, right? Some are more focused on particular areas of medicine that apply to the situation. Same for experts. Some experts will have expertise in particular industries purely because of the types of matters that they've carried out historically. So it might be that you need to do a bit of a ring around experts to see if you can find the expert that has that expertise that you really need for that particular situation. Now, quite often I'll get a phone call and say, we've got a particular dispute, we're needing this type of expertise. Is that something that you can help us with? And sometimes it might not be, but I might be able to then direct them to another expert that I know who has operated in that area, to then set them on the path of trying to find the most relevant expert for their matter.
I always say horses for courses. Of course. It really depends on what we're looking for and what we're hoping to achieve. And again, all to do with preparation in that stage, but making sure you've got the right people in the room and the right information so that you can work together to work out your strategies for your negotiation, even with dispute resolution, even more so, because at some stage a court might be looking at this. Yeah, excellent. I'm coming back at you. We're now reaching almost the end of our webinar. We've got 10 minutes more, and if there are any questions you might have for Kellie, please feel free to go into the chat. We've had 3 really good questions out there, so looking forward to some more. Looking forward to Kellie being put on the spot. But moving along, from your experience, kind of questions someone might ask a forensic accountant, is there a set load of questions, this is the kind of questions we're looking for, you can download it off Google or someplace, or is
questions that the forensic accountant will ask a business? Generally you'll find that there'll be if we're starting a matter, we'll have a fairly standard set of, it's almost like a document request. So it'll be financials, it'll be business plans, it will be tax returns, it will be a description of the business operations. From there, there'll be key, if we're doing an economic loss, or particularly if we're doing evaluation, there'll be key areas that there's always questions around. And without delving too deep into valuation, there's always a question around the commercial value that's being paid for some of those expenses, like rent. For some businesses, they may own the building that they're operating from in another entity or a super fund. Super funds are a little sort of entity on them of their own. Generally, they need to be charging back a commercial rate of rent, but if we're in, say, a trust, there might not be a commercial rate of rent. So that might be a question that's asked. And then, has a valuation of the property been done? Commerciality around the wages that are being paid to the business owner, and also are they using the business to pay personal expenses?
Now that's an interesting one, especially in the entrepreneurial.
And for an SME size business as well, where you've got the owner operator, basically using
like us,
using the business to sort of almost pay their personal expenses, a way of being remunerated through the business. So there's always questions around that. At the moment, key areas also are assets held by the business. With the tax relief that's been provided by the ATO, businesses have been able to write off 100% of the value of those assets in their profit and loss statement. So they're expensing 100% of it in the year that that asset has been purchased. But they're still holding on to those assets, and they're still using those assets to operate the business. So those assets have a value, but they might not necessarily be recorded in the balance sheet or in their depreciation schedule because the value's been written off in that year. So that's a key area that, from a valuation point of view, we're looking at the moment. So we need to ask, what assets have been purchased and have been written off, when were they purchased, what was the value of them, so that we can assign a value to the assets, the tangible assets that are still being held and used by the business.
And that's quite interesting because you've written them off, obviously, quite legitimately.
Yes, absolutely. Yes.
And yet they're still there.
Yeah. So the assets are there, but the value is not recorded on the balance sheet.
And then if I'm not going into
so if you're
details.
if you're going into a transactional situation, you want to know what assets you're buying as part of that business. And the depreciation schedule may or may not include those assets that have been purchased and written off in the year that they were purchased. Depends on how the entity's been accounting for it. There's no obligation to absolutely have all of the assets listed in that depreciation schedule because they've been written off. But you certainly want to know, well, what assets am I getting as part of this transaction?
You walk into the business, there are about 20 different motor vehicles.
That's right. And we've got 3 on the depreciation schedule. And they're 10 years old.
And
so,
I haven't
that's part of the due diligence of that transaction as well, which is not where a forensic accountant will come in, but an accountant that maybe sort of a corporate finance type of accountant looking at, well, what assets are we dealing with this transaction? Do we have 20 cars? Do we have a fleet of cars because we need them to be able to operate the business, but they're not on the depreciation schedule? So it's all those checks and verifications of what's actually being purchased.
Wow, I never even thought of that. That's learning a bit more about accounting today. That's fantastic. I've got a question from Lisa.
Yes.
Does the forensic accountant ever reach out to third parties, for example, to check that an invoice was accepted by, this is good, by a customer and actually paid by the customer?
No, that's not the role of the forensic accountant. When the forensic accountant goes through the work that they do, they rely on the fact that the information being provided to them is accurate. Although that said, we will, as I said, do a sense check, and there'll be areas that we'll ask questions around. That particular scenario of looking at whether a customer's invoice is being paid is really an audited job. Not all entities will be audited though, either, because of the size of them. And that said, when an auditor does go to audit the financial statements, they'll do checks of that, but they'll do them as a test group. So they won't check every single invoice. They'll do a batch test to get certainty around the fact that those examples within their batch have been processed correctly. If they find that they haven't, they might expand the size of their sample test group. So not a forensic accountant's role, it's actually an auditor's role. Maybe in the due diligence, they might do a little bit of that if there's concern around it, but normally auditing.
So basically, don't take everything at face value at due diligence in some senses, maybe even if it's a small organization or an SME, or not really an entrepreneurial small business that doesn't have to have a specific audit. It might be a good idea to say, let's just check out a couple of invoices as part of the due diligence and look at the accounting and how they account and look at their books. But that would not be you.
No, generally it's not the forensic accountant. And that, I mean, depending on the size of the transaction, if you're looking at really small entities, quite often they won't even go through a robust due diligence exercise. So that's also something just to keep in mind, I guess, in looking at doing at least some due diligence around those key sort of areas, if there's concerns that are sitting around whether the numbers and figures look right, or if there's variations in figures from year to year.
In fact, one of the mediations I was involved in was just that, it's a small business. No one did due diligence. They used some agreement from Google. I won't go into that. And suddenly the person walked in, and I mean, it sounds like something out of an exam question in a law, at the law faculty that you'll never see in real life, but it happened. They invited the person to come and sit in the business on the busiest day.
Yes.
So they were a restaurant. They asked them to come in on a Saturday
Yes.
evening, and it was, busty. And then the guy got the business, and all the invoices were wrong. The accounting was all over the place. It wasn't what he thought. And
Right.
suddenly we're in a dispute at that stage. So
Yes.
it really is something that comes up quite often.
Yeah.
Where you don't, and you're not paying that much money maybe. So you think, well, maybe I don't need to do it. But then you've got a business that isn't worth the paper it's written on. Yeah.
So maybe there's sort of questions to be put during that transaction around the accounting system that's being used, whether the business is using an internal bookkeeper or their accountant to prepare financial statements, just knowing then that there's some robustness around the preparation of the financials that you're relying upon in making that decision around that transaction that you're going through.
Excellent. Yeah. So now we're coming to the end of the webinar. Just I'll briefly summarize what I've heard here. Kellie, it's been very interesting. So basically, forensic accountants can be very helpful, not only at the dispute litigation level, but right at the beginning of a transaction, specifically around where we might need complex valuations at that stage. And in the due diligence process, if anything comes up that seems a bit odd, that's the time to bring in a consultant forensic accountant, potentially, if we want them to assist us in strategically negotiating. But if we have an issue around valuations in a transaction, it might be good for both parties to bring in an independent forensic accountant. And the same goes for disputes. Really, we might want a consultant forensic accountant to assist us in working out our dispute strategy, whether we should settle or not and on what basis. But at the end of the day, we might think it's a great idea to have an independent forensic accountant looking at both parties and providing an independent view on which we can base our decision on where we're heading. And then fantastic example. So I'll leave it to you. Do you have any final words you want to say about forensic accounting that I've left off in my very brief summary? That you said so many good things.
Look, I probably don't have too much. You've covered off everything there. I think the key is that if you feel that there's a potential use for a forensic accountant, don't be afraid to give one a call and just talk through the situation to see whether they can be of assistance. If you've got a party, or you are a party, and you just don't quite have comfort in what's being provided to you by the other side, then it's kind of like a comfort, like a sense check to have somebody come in and have a look at that independently from the situation. So by all means, reach out and ask the question. Use this as a sounding board initially. It might be that it's not an area that we can assist in, but the forensic accountant may be able to point you through to somebody that can.
And that's something that I do.
Yes, you
do. I do. Yes, yeah, I do. And I know how to reach you, but if someone else wants to reach you, how do we get in contact?
All the contact details are on our website, so www.forensicsolutions.com.au. There's email, phone, any of the normal ways of communicating. Please reach out and we can have a chat.
That's fantastic, Kellie. Thanks for all that information. I thought I knew a little bit about forensic accounting. I've learned a lot more today, so I might not be calling you as often for that.
No, always call.
Thanks so much for joining us for this second of our Confidentially Speaking webinar series. I'm looking forward to continuing the debate and the chat, because we always chat at Confidentially Speaking. Going forward next year, we're hoping to have at least 5 or 6 webinars, and the format that we've used today would be pretty much what we would be doing. If you want to find more out about us at Confidentially Speaking, it's www.confidentiallyspeaking.com.au. And then again, thank you, Kellie. I know you've taken time out to educate us, and we really appreciate it. And thanks for being a friend of Confidentially Speaking.
Of course. Thank you.
Thank you. Thanks.